Thank you for joining us at xm.com for the Daily Market Comment by Ref Boyajian. I'm Cristina Marujos. It was a relatively subdued start to the week across financial markets on Monday, as stocks, bonds, and the dollar were still reeling from last week's U.S. CPI shock. The panic and fallout from the jump in U.S. inflation to a three-decade high have subsided a little, as the Fed is not seen to be changing course just yet. With a raft of Fed officials scheduled to speak this week, investors will be on the lookout for any shifts in the transitory narrative following the latest inflation scare. Wall Street skidded while Treasury yields shot up as U.S. CPI hit 6.2%. The S&P 500 and Nasdaq Composite have since posted a decent rebound, and bond yields appear to be retreating slightly, but there's still the October retail sales report on Tuesday to get through. U.S. stock futures were last trading marginally higher, and European shares also firmed after a wobbly start. In Asia, the region's major indices managed to reverse earlier losses with the exception of Chinese stocks. China posted stronger than expected growth in industrial output and retail sales in October, but although this lifted the mood slightly globally, concerns about China's highly over-leveraged property sector are still weighing on domestic investors' minds. Meanwhile, tensions with the United States over Taiwan have resurfaced lately, adding to the importance of today's virtual summit between President Joe Biden and President Xi Jinping. For the markets, however, the main focus will be on whether the two leaders can find enough common ground to pave the way for a reduction in some of the Trump-era tariffs. In the FX sphere, the dollar index eased back towards the 95 level but remained stable as the euro and pound struggled to regain positive traction after last week's tumbles. Reports that the United Kingdom and European Union may yet be able to work out a solution to the problematic Northern Ireland Protocol have boosted sterling versus the euro, but against the greenback, it's all about yield differentials. UK and Eurozone yields have fallen back quite substantially during November, though the same cannot be said for Canadian, Australian, and New Zealand yields. The Aussie and Kiwi are both extending their rebound versus their US counterpart, though the loonie lagged as oil prices slipped further on Monday. This was the Daily Market Comment. Thank you for watching at xm.com.